Scare favors favor. Bitcoin miners, the heartbeat of the crypto market. Imagine a world where a single coin, Bitcoin, is the beacon that guides the performance of an entire sector. That's the case with the crypto mining industry, which has been under the spotlight recently due to a bull run in the market. But what's the relationship between Bitcoin and the performance of this sector? Let's dive in. In the third quarter of 2023, the hash rate index released a comprehensive report on the state of crypto mining. The report painted a vivid picture of the crypto mining landscape. From July to September, the stocks of public Bitcoin mining firms were on a roll in July, as Bitcoin was trading north of 30K during most days in the month. But when Bitcoin's price dropped to the $25K to $26 range, the stock's performance also took a nosedive. As we can see, the stock performance is closely tied to the price movement of Bitcoin. The report also highlighted some interesting trends in Bitcoin's hash rate. It grew by 56% during the first 5 months of 2023. Then, during June, July, and August, it fell by a modest 1.3%. In September, it suddenly increased by 12%. Ultimately, it reached an all-time high in mid-October after growing 6% so far this month. That it's going to be revolution. The report's authors suggest that this is a seasonal pattern during the summer. US-based miners, who make up around 40% of Bitcoin's global hash rate, tend to curtail their mining activities during these months. Texas, the mining hub of the US, is particularly hot in the summer, which often leads to a decrease in mining activities. The report also provided insights into the Bitcoin production and hash rate of the leading Bitcoin mining companies. Marathon Digital, for instance, grew its operational hash rate from 7.3 EHS to the spot by $7.1 million, and it's not going to adopt you only a million unit. They talked to what, 1 million knowledge of residents of 23 EHC if it deploys its existing stock of S19 XP rigs to replace their S19J Pros. And the Riot platform saw a significant drop in its Bitcoin production. The hash rate of the firm also didn't grow as expected. The main reason for this modest performance was the support to past death that Senshin Emerge and Iris Energy dramatically increased its hash rate from 1.57 EHS to over 55 EH this year. The reason behind this growth is the mining firm procuring new machines to replace the ASICs. However, its Bitcoin production dwindled during the last few months. Core Scientific saw a significant drop in its hash rate capacity due to its restructuring during its Chapter 11 bankruptcy. During the bankruptcy proceedings, it sold all of its BTC to pay creditors and cover operational and bankruptcy costs. Its Bitcoin production was, however, not so disappointing. Jaron Nalarud, one of the report's contributors, drew our attention to the growing share of public Bitcoin miners to Bitcoin's hash rate over months. In January, public miners contributed 17% of the total hash rate. It grew to 27% in October. One thing to keep in mind is that the next Bitcoin halving is also nearing, scheduled to take place next year. A number of public Bitcoin mining companies are aggressively expanding in order to be prepared for the development. The report concludes that the U.S. still retains the most hash rate out of any country. North America alone retains roughly 45% of the global hash rate. Europe, particularly the Nordic region, has also become a popular destination for public Bitcoin miners. With that said, thanks for watching, and until next time. And here's a little joke for you. Why did the Bitcoin miner go broke? Because he couldn't afford to buy the latest ASICs.